Now let's get back to FedEx. Those shares are moving higher, up about 1% after reporting second quarter results. Joining me now is Brandon Oglenski from Barclays. What's most eye-catching about this report? There's some cost things we know about that they've been working on, but priority seemed to be working.
Yeah, John, thanks for having us on here. I mean, I think a few things going on here for FedEx, and we'll get to the company specific in 1 minute, but all investors kind of look to this one, especially with how they're off calendar. And what we saw today with the report is, increased domestic package volumes, which I think speak well to the idea that maybe the domestic economy is on pretty solid footing here. And then obviously specific to the company, you spoke to it. I mean, they're getting a lot of price traction. Importantly, they're merging their express and ground networks, so margins came in higher on the package side than I think most people are looking for. And the company did raise the annual guide for revenue growth of 5 to 6%. I think they'd been looking previously for like 4 to 6, and they tightened up their EPS range at the high end as well. So lots of things to like here, especially as you look into next year. They're spinning off their freight LTL business, which I think a lot of investors had been skeptical that could drive value. But as we get closer to that date, I think people are realizing there's a lot to be had from FedEx here.
Well, I was talking about that one-year chart on FedEx. Are we out of the hole? Because it looks like if we zoom out to a year, there was indeed a hole to climb out of, and maybe the stock just in the last few trading sessions popped out of it.
Yeah, I mean, I agree here. Look, if you're putting the bottom on that chart, that's Liberation Day, when I think all of us in the U.S. felt very liberated. But nonetheless, what we're seeing here is a company that's really on a transformative journey. Again, they used to run separate express and ground delivery operations. That's 20% integrated as we sit here today. They want to be 40% integrated in the U.S., I think, by next May, and then close to 100% about a year to 18 months from now. So there's more cost efficiencies, more margin upside to come here. And maybe unlike the Nike story that we're hearing right now, like we're in the later innings of this where we're seeing pricing upside and margin upside from the company. So as we look into 2026, this is one of our best stocks. We recommended 6 to 7 stocks just yesterday, and FedEx being one of them, just because they're spinning off that freight business and going to benefit from these network integrations that they're pursuing.
Any particular pothole you're looking out for in the first part of the year for FedEx?
You know what? They have a lot of leverage to international trade, and that definitely hit their earnings, a couple quarters ago when we did away with the de minimis rule, and obviously the tariffs have hit them pretty hard. I think their Asia to U.S. business is down like 20%. So there's a lot of incremental margin there, but I think they've done a pretty good job addressing that on the cost side now. So, anything can happen in transports, especially FedEx, but I think we're shaping up for a pretty good 2026.
Yeah.